Fintech and Payments, or now the YouTube channel, which we've got set up. So that should be out streaming live now on those platforms. So that's just going live now. So this room will be recorded. We do that so we can catch some notes that goes onto our blog later on after the show. So please do bear that in mind if you join the stage. Anyone who's welcome to join the stage, just simply raise their hand at any time. The whole point is to have a kind of an open mic session. And we use this show as an opportunity to wrap the week, talk about any news that's come up that we think is interesting. And it may be something you've seen in the news that you're like, I don't understand what's happened there. What's that about? It might be something that you wanted to share, basically something in your journey that is relevant to fintech and payments topics. You'd be more than welcome. What we also do is we use a tool called Slido against all our rooms, and sli.do. If you type that into your internet browser, and I'll just make sure this is set up, but you use the code SS16M, so Sunday Surgery, 16th May. And that way, regardless of which platform you're using, you'll be able to reach us. So Slido is quite a cool conference tool. It effectively allows people not only to ask questions, so you can type in your question, and you can either do that in your own name or anonymously. You can also upvote other people's questions, and what I do is I copy over any questions we didn't answer the previous week, I copy across to this week. So I normally take questions from the top of the queue on Slido. So the ones that get the most votes tend to get answered first. What Slido also allows you to do is to run polls, and there will be a poll live in just a few moments, which simply asks, how did you discover the room today? It's a way that people can get comfortable with the Slido tool. It's also really useful data for us as we build the club, because as you can imagine, as it's such a new platform, everyone's finding our content in different ways. And we are constantly looking to improve the way that we can send out our notifications through different channels so that people can get hold of that. So we now have a part-time social media manager, Freya, who works for us. She's just finishing up her degree her master's degree in social media. And she's helping build our social channels outside of Clubhouse across LinkedIn, Facebook, Twitter, Instagram, Telegram, you name it, we're getting that. So there is a poll now live on Slido, sli.do. If you take a couple of minutes, I'd appreciate it. Simple question, which is, how did you discover this fintech and payments room today? You go to Slido in your internet browser, sli.do, and then use the event code SS16M. That's our hashtag for today's event. And you can ask questions via Twitter as well if you want to. But what's cool about Slido is we get them all in one place. So a bit of background to me and the club. So my name is James. I'm one of the founders of the Fintech and Payment Club. My day job is that I work for MasterCard in a division called New Payment Platforms. New Payment Platforms is the area of MasterCard that does everything but card. So we look after account to account in particular. So that's the ability for people to send money from a bank account at Bank A to an account holder at Bank B. MasterCard has been investing in that area for over 4 years now. Since the acquisition of a company called VocalLink in the UK, and recently a part of the Nets business in Europe as well. So that's for the day job, but these are all my own opinions, and this is what I do for fun around the edge. So this is not the views of my employer, but just my personal opinions today that you'll be hearing on this show. That gets the compliance piece out the way. Anyone who'd like to join me on stage, you're more than welcome. But the first question that's been carried over from last week was left by Alex, and his question was one a little bit close to my own to my own employment. So I'm glad I got the compliance question out of the way first, which is, Alex asks, given the recent uptake in direct instant payments, which are very low fees, can we see the MasterCard and Visa inverted commas cartel fees be greatly reduced in coming years? So it's a great question from Alex, and it's something that's been on my mind for quite a while. I first worked for MasterCard's consultancy business called Advisors in 2014, 2015. And I then stepped away and was the CEO of a fintech business called Growth Street in the UK. And then I actually joined MasterCard proper back again in 2017. I joined the VocalLink business just after it had been acquired, but before it had been fully integrated into MasterCard. And so for me, it's been an interesting personal journey where I've seen the transition from a company that was predominantly focused on card payments to be, in the words of our CEO, a multi-rail company. And when we mean rail here, we mean different payment rails. So different ways to pay. And that could be account to account, so moving money between bank accounts directly. It could be using card. It could be using digital ledger technology or blockchain, those types of variants. And it's been a big transition, I think, for our company, and I think for the world, as we begin to realize that there's other ways that we can facilitate payments. And my sense is that I've always seen that real-time payments direct from one account to another have a phenomenal ability to improve the flow of money. And the reason I say that is because in most geographies, it allows you to move instantly cleared funds. So as soon as I transfer money from my account to your account, that account balance is ready for you to spend immediately. You can take cash out the wall. You could use it to buy, groceries, whatever you want to do with that money. It's available for you to spend in real time as soon as I've sent it. Now that speed element is good for a number of reasons, because it reduces risk. So the uncertainty of whether money will be received and whether it will be available to spend. Typically these systems work in a modern, efficient way, so it reduces cost as well. So it's cheap, if not free, to facilitate these transfers as an individual. And so it does have the ability to radically shake up the existing payment market, where there may be fees and charges and delays and risks that are larger than what can be achieved on account-to-account transfers. Now, what's interesting, though, of course, for me, is that capability has been around in the UK since 2008. 2008 saw the introduction of a service called Faster Payments, which was effectively what I've just described: real-time payments at no cost to me as an individual, that allows the transfer to money to have in real time and for the recipient to be able to spend it immediately. And what we've seen instead in that time, in the last 13 years, is actually card payments have grown in popularity. They have increased in the amount that people use them as a replacement for cash. And while we've all got mobile banking apps which would allow us to organize a payment in real time, very few of us use them for a person-to-merchant transaction. We tend to use them for ad hoc payments, for maybe making sending money to a friend, paying off a gardener for work that's been done ad hoc, whatever it might be. But we don't tend to use them religiously for most of our e-commerce transactions or for physical transactions at a point of sale. And I think that's got a lot down to behavior and a lot down to convenience, because we find it easy to take a phone out of our pocket and tap it against a terminal or a physical card. And the rise of contactless transactions, to be able to arrange a payment using effectively radio frequency rather than having to push a card into a terminal or swipe it through it, has made that even easier for people, rather than potentially getting a mobile phone out, fiddling with it, signing into your banking app, working out who to pay, and all the rest of it. Now, that's a lot down to interfaces than it is down to the underlying card rails, if I'm honest with you. And I think if the interfaces were as good for account-to-account payments, that would, I think, increase the adoption of account-to-account payments in that particular use case of person-to-merchant. But it is, I think, going to take a long time for the interfaces to improve and for the customer understanding and knowledge to improve. So I think it will be quite a while before we see a seismic change in the person-to-merchant transaction space as people adopt account-to-account. That's coming from the perspective of someone who lives in the UK, where the card market is already well developed. I think you have to realize that in other markets, where the card infrastructure may not be as prevalent and card issuance and card acceptance may not be as popular, then there is an opportunity, I think, to maybe leapfrog to these new ways of paying. We've seen that in jurisdictions in Africa, in Asia, in Latin America, where mobile money, so typically money, mobile financial services have been delivered through a mobile phone network, have allowed people to jump straight from cash to that new method and not necessarily go through the card issuance and acceptance stage. So I do expect that to be a different perspective depending on where you are in the world. And I think that's one of the great things about Clubhouse, is that we do get lots of international perspectives on this topic. So if you're in the audience, you've got something to say on this, please do raise your hand. Just click the hand raise icon at the bottom of the page. You'd be more than welcome to join me on stage, as Dean has just done. Dean, hopefully you can accept my invite. Welcome to the stage. Great to have you with us this morning. Thank you very much. This is an earlier start for Sunday surgery in the UK at 7:30 a.m. because I'm now on summer hours because I play cricket. But great to have you with us. Perhaps you could give a couple of sentences on yourself, sir, and where you're joining us from, and whatever your question or perspective on this topic is, you'd be more than welcome. Welcome to the stage.
Sure thing. Thanks, James. So my name's Dean. I work for Amex out of Sydney, Australia. So later in the day, not quite an early start, thankfully. Just on the topic, it was really interesting to hear in terms of some of that account to account. Obviously, there's a lot of movement in the local market down here as well around looking at some of those new payments platforms and following some of the UK lead in terms of open banking and the consumer data rights starting to really take off. The question asked a lot about in terms of the card fees and things like that as well. I'm just wondering if, and again, it probably varies market to market, but for some of those card developed ones, is there more of a shift that we've seen in terms of the fee structure and looking at the sort of some of the generational shift as well, with younger users sort of skewing towards debit cards compared to credit cards, just around not only the merchant side but also the convenience factor that you've sort of outlined?
Yeah, great question, Dean. I think so. I think we definitely do see a generational shift to increased use of debit cards. I think that's one of the reasons why we've seen a big rise in the UK, in particular, in buy now, pay later, because people are less likely to have a credit card, and if they want to defer a payment, defer the payment for a purchase they've made, then that's why I think we've seen kind of point of sale finance like buy now, pay later in the online domain really pick up. So yes, I would agree that there's been a generational shift there in terms of kind of my nephews and nieces who are turning, from leaving school into their 20s through university, etc. I don't think the credit card for them is the status symbol it perhaps was for me when I was at that age. So I do agree there's been a generational shift there. I think also we've got more choice, right? I think a lot of prepaid cards are in existence as well, which tend to go well with challenger bank or new banking propositions because they're an easy way to get into the market for a fintech. So yeah, where there wasn't the kind of that range of prepaid being available, where there wasn't also the same cachet of holding a credit card, I think we have seen a shift to debit. Now, in terms of the fee element to that. Yes, typically debit charges for acceptance are lower than they are for credit. The degree to which they are different depends where you are in the world. And in the European Union, there is multilateral interchange fee regulation. And what that effectively says is that the amount of money that can be passed from a card acquirer for processing the transaction on behalf of the merchant to the card issuer who gave me the piece of plastic that allowed me to go and buy using that card, that has been regulated in the European Union, so that now, where before that might be as much as 1 or 1.5% that was being paid to the issuer for basically issuing the card, that is capped at 30 basis points, 0.3% for a credit card and 0.2% for a debit card. So in the European Union, for example, that differential is much, much smaller between credit and debit. And so I think the reduction has happened from an interchange perspective because of that regulation in Europe. And I know in Australia and other markets, you've had a similarly interchange regulation that's been put in place. The complexity there is at the front end, the merchant discount rate, the amount the actual merchant loses or pays in fees, I should say, for processing a transaction has kept relatively steady. So typically it's around about 2 to 3%. So if I buy goods for £100 from a merchant, the merchant ultimately only receives between £97 and £98. And the £2 to £3 that are taken away, the merchant discount rate, it's called, or the merchant fees, effectively are paid to the different actors in that process to compensate from the work that they've done. And obviously, you have a card network like MasterCard, Visa, or Amex that helps organize that transaction as the network in the center. You have the acquirer that provides the merchant with the terminal or the online gateway they use to process the transaction with the card holder. And you have the issuer that obviously provides the card to the customer. They're typically might be their retail bank or an independent organization like Amex, if it's that way organized. And so while the regulation has impacted the amount of money that flows from the acquirer to the issuer, it doesn't necessarily impact the way that the fees are paid amongst those players. And so I think what we've seen is some substitution effects where, while interchange fees may have been regulated, the scheme fees that are paid by acquirers and issuers haven't. And so in effect, the net result is that the merchant discount rate has stayed relatively similar. So from my perspective, I think in terms of how the card networks operate, the fee situation hasn't changed radically. Yes, one part of the journey has been regulated, but the rest of it has not. And so the merchant discount rate largely has stayed the same. What has been impacted from my perspective is that individual cardholders don't have access to the same benefits that they once did. So previously, when interchange was in existence and acquirers were compensating issuers by 1.5%, whatever it might be, often card issuers would pass that benefit on to me as a cardholder for transacting. So there were in the past quite lucrative offers on cashback, on other forms of rewards like air miles. And what I think we have seen as a result of the interchange regulation is that a lot of those benefits accruing to cardholders have been reduced. And I think that would be one of the perhaps unintended consequences of regulation. At least that's my experience in the European market. But Dean, you've had interchange regulation for a while in Australia. It'd be interesting to know your take on that.
Yeah, no, it's definitely been similar, and looking ahead to some of the account to account stuff you touched on as well, it's as you mentioned, the end result doesn't seem particularly different, but you've got a lot more players in a transaction now. So you're right that it's the end merchant result doesn't seem to have changed a great deal, but the merchants are now playing an SRCI for those transactions, or an MPI for a 3DS transaction, or an aggregator, or a switch, or there seems to be a lot more slices of the pie essentially being taken that's sort of eaten up some of the benefit of those interchange regulations. The interesting side from the Australian perspective is we do also have the surcharge regulations too, which regulates exactly what an end merchant can pass on to a customer in terms of the front end surcharge, which is a lot more prevalent here, which, as you said, certainly does eat into some of those cardholder benefits. So again, from our market sort of perspective, we've certainly seen the similar sort of thing. There tends to be a slight sort of erosion in terms of benefits, but it's been interesting looking at some of the market research and demographics and things coming out that the younger base really seems quite not necessarily as point savvy, or there's always seeming like they're not always looking for the highest points or the best sign-on bonuses or the most cashback. A lot of the switch towards debit and things like that seems to be driven by a sort of simplicity which some of the account to account or personal financial management services seem to provide. So it's interesting seeing some of the perspectives from different localities and different markets, as well as sort of a little bit further ahead in that curve in terms of some of those open banking parts as to where that plays into that shift across to either card-based rails, but much more of an app-to-app transaction, or whether it's more of these, more mobile banking type options that you see in other developing markets. So it's interesting to see which bits get picked up in which markets.
100%, I agree with that, and I was surprised. I last visited Australia in 2012, I believe, and I was taken back. It literally was at the airport as I arrived, picking up a bottle in duty free, obviously. And I was, there on the counter was a sign explaining to me that if I used a certain card, or I would pay a surcharge. And it was interesting to me because in the UK that's not allowed; it's actually illegal. So the government has stamped out on surcharging. Particularly, they were unimpressed with a number of online retailers who are effectively getting you all the way through a sales funnel with a stated price, and at the very last minute would then slap on a surcharge. So they basically passed a law that said you couldn't surcharge in the UK. I'm kind of curious, Dean, in Australia now, is it that all cards are surcharged, or can merchants surcharge differently depending on the network or the type of card being used?
Yeah, so the regulation essentially allows for surcharge. So merchants, and again, merchants are always encouraged not to surcharge because, as you said, if you've you spent $20 or $30 getting someone through a sales funnel, it's terrible to see them right at the very end and abandon a basket just because of some tacked on fees. But merchants are allowed to surcharge only up to the maximum cost of acceptance. So interestingly, it's changed a whole lot of the statementing and things like that from the acquirer side, so that you have to be very clear and upfront in terms of transactions process what the cost of acceptance is, and that's the maximum they're allowed to pass on. And again, the government sort of took a very dim view of some of the airlines and things like that, which would have a flat, any flight you're booking is a $20 fee for using a card. And, if you're using a debit card and buying an $80 flight, suddenly that's a very high percentage of a surcharge, 10 times what the merchant's actually paying. So that sort of banned a lot of those cap surcharges. So you can either choose to not surcharge or pass on the exact cost of acceptance that you face.
That's really interesting. And I guess how deep does that cost of acceptance run? I mean, one of the benefits that people typically get as a card holder and processing a card transaction rather than they might for just an account to account transaction is protection if things go wrong. So if I order something online, the goods never arrive, or if they arrive and they're faulty or damaged, and I can complain to the merchant obviously and say, hey, you've sold me something that's duff. I want my money back, or can you send me another one? But if the merchant doesn't oblige, then I have the protection right of what's called a chargeback, where I can go back to my card issuer and say, hey, I never got what I wanted. It wasn't complete. Can I have my money back, please? Because the merchant won't give it back to me. And so you can process a chargeback and therefore get my money back. Does the cost of acceptance, does it take those sorts of things into account? Effectively, this kind of inherent insurance that's effectively provided to cardholders against their transactions each time they pay?
And that's the idea, and it depends on if you're obviously a three-party or four-party scheme. So I can speak more more authoritatively from a three-party scheme, but it's certainly bundled into the overall cost of acceptance. And again, it's part of the value proposition as an acquirer that you put forward to a merchant to say that, look, there will be these things that we can sort out. That way, you're reducing a number of actual disputes you get showing up at your door. We can handle some of the chargeback volume, and it's the benefits that are provided as part of an issuer. So it does tend to get bundled into one sort of rate, and depending on the bank that you're going through as an acquirer or your switch or terminal provider, whoever you essentially take your payment services from, they'll usually have to bundle everything that's included into a sort of headline rate for you. So you can charge for this type of card 0.2%, and it again, different stores do different things. You can get ones that go down to the logo level or the plastic color or something like that to be really specific, and other ones that are just a broad thing, anything on this scheme or anything that's credit or debit. So they do different options, and you can charge less than what your cost of acceptance is, but you can just never charge more.
Right. Wow, that sounds really comprehensive. I guess it's interesting because effectively you start to get a signal of how risky this merchant is, right, as a consumer, because effectively if lots of people are doing chargebacks against the merchant, then it's going to cost them more for acceptance, and therefore they're going to put their prices up for a surcharge. Whereas I guess if I go into a grocery store, the chance of me taking back my melon for it being, faulty, having just eaten it, it's quite slow. It's quite low, right? So that's it's kind of very, very interesting to me that you effectively could get that level of differentiation, and you'd start to see those signals almost like as a consumer. Very, very interesting. On the account-to-account side and open banking, etc. I mean, it's going to be very, very interesting space to watch. Obviously, it's still very early days, but I do think there's a big consumer education gap at the moment, depending on where you are in the world and depending on the potency, let's say, of the account-to-account scheme. Because in the UK at the moment, faster payments, like I said, has been around 13 years. Affecting a chargeback over faster payments isn't anything. Well, first of all, it's not easily understood. It's not easily achieved. In most cases, the banks will simply say, "You sent money from your account to another. You chose to do that. There is no way to get your money back." And so, as people begin to investigate, doing person-to-person payments directly from their account to say a merchant account rather than using a card, or even if it's facilitated through some form of open banking transaction where a third party is effectively intermediating with my permission between me and my bank to arrange that payment. The lack of protection, I think, is not widely understood. compared to, say, a card transaction, where I think the schemes and the issuers have gone out of their way to advertise the benefits of the protection provided by a card transaction. And so while I think for some time it may be attractive for certain merchants to direct customers to maybe make a account-to-account transfer or an open banking transaction, it may be that over time either that market develops to include some form of protection and therefore will include some form of fees for processing a payment in that way, or there'll be a stronger level of customer education which says this route gets protection and this route does not. And therefore, are you comfortable organizing a transaction in this way? And I think that in certain merchant categories, open banking will be, and an account-to-account transfer will be far more attractive than in others for that reason. So to extend the grocery analogy, right, it's no surprise to me that one of the organizations that's pushed furthest into open banking thus far is a supermarket. And Tesco, who also have their own bank, which confuses things a little bit, but in effect, as a merchant, because groceries are such low margin, such a high volume, low margin business, the cost of payments is a significant number for them against their profit margin. And so they are the ones that have experimented most, I think, so far with looking at alternative ways to pay that allow you to arrange a payment directly from your bank account to their bank account, particularly if it's your own bank account with Tesco Bank into basically Tesco's merchant account. And what I anticipate we will continue to see is either price differentiation based on the way that you pay, or we will see kind of further additional incentives that are placed alongside the transaction to say, if you pay this way, then we'll give you more club card points, or we'll give you more vouchers for future purchases, or whatever it might be. And I think you'll see some merchants deliberately trying to encourage customers down a particular payment choice because it's better for the merchant. And I think depending on how good the user experience is, if the merchant does a great job of making that user experience as good, if not better, than the existing alternative, then they could be quite successful in doing that. What's interesting in the UK is that they can't do that by surcharging. They can't say, if you pay with a card, it costs you 100, but if you don't pay with a card, it's 98, because that effect then says £2 was a surcharge for using card. So it's a kind of a complex grey area in my mind in terms of how to manage that. But I think what they can do is basically say, if you use an account-to-account transfer, we'll give you 4 club card points for every pound. Whereas if you do it on a card, we're going to give you 1 club card point per pound, or something like that. And we've certainly seen that with Tesco experimenting with their own payment methods, encouraging use of their own cards in their own stores, and so on and so forth. So I do expect to see more signals that way delivered both in the physical store, but also online as well, where if you look at the capabilities that are being built into the next set of payment standards for online purchases, there's a international body called W3C, which effectively manage standards for the World Wide Web, hence W3, WWW. And that consortium is a combination of mobile phone manufacturers, internet browser makers, and so on. And I think they are now creating a set of kind of inherent payment APIs that will be supported by your browser that will provide, when it comes to the payment page at a checkout online, it will provide relevant payment options that could effectively be engineered by the merchant in a way to present you not only different ways to pay, but different prices against those payment options. And that, I think, is probably the direction we're traveling in. But it will be very interesting because it can lead, I think, potentially a little bit like the Australian surcharging example that Dean shared. It could lead to quite a lot of confusion and quite a wide array of choice. And so it will be interesting to see how that complexity is managed, or whether some of the choices will be taken away because merchants will deliberately try to steer consumers into paying a certain way which favors them. But very interesting space, Dean. Thanks for the extra perspective from Australia. Really appreciate it. Anything to add on this? Otherwise, we'll move on to Sarah, who's next in the queue.
No, the only thing to say was it's interesting that grocery space. I know that MasterCard and ING were doing something in the Netherlands with a sort of more than just a token trial they were doing, which again merges some of that online and offline. You know, WC3, you're doing essentially an online payment while you're in the store utilizing a different token. So it is an interesting space to watch to see how it develops. Thanks for the time.
No problem. You're most welcome. Thanks for the perspective. And yeah, it's not the Mastercard ING example. I'm not that familiar with, but I'm sure there's plenty of experimentation in this space going on around the world, and I think it's going to be a very very interesting space to keep tabs on. Sarah, welcome to the stage. Thanks for being patient. Great to have you with us. When you unmute, please maybe give us a couple of sentences on you and your background and where you're joining us from, and then step forward, whatever your question or perspective is. Welcome to the stage.
Thank you, James. Yes, I'm Sarah. I'm joining from Switzerland, and I have been working in emerging markets for the last 15 years, more specifically on lending. But with the arrival of fintech, I am seeing apologies that a lot of payment processors are also entering the lending space, and so I've started to look more broadly into payments too, but more only in emerging markets. And so I have a few questions regarding what you've introduced, James, at the top of the conversation regarding real-time payment system. As in emerging markets, usually the carded population is very low. You know, what I see is usually between 3 and 10%, and starting with debit card and only a very tiny proportion being carded with credit card. And so what we're seeing is the arrival of the virtual card issuance by fintech once they've had sufficient penetration to be interesting for the credit schemes. And I was interested to understand what are the applications, the wider applications that can come with the real-time payment system that we also see certain emerging countries to start set up, and how which type of effort does it take to build those real-time payment system in order to facilitate digital payment for those that are unbanked?
Thank you, Sarah. Yeah, great question, great perspective, and I totally agree that in more developing markets, card issuance and card acceptance is low compared to what we're used to in somewhere like Switzerland or the UK, and that the ability for real-time payments to make a meaningful difference in those types of economies is enormous, provided the population has access to some other digital interface as a way to pay, because real-time payments is electronic by definition, and it requires a way to organize a payment. When faster payments was built out in the UK, it was predominantly because people were thinking about online banking. So sitting in front of a desktop computer or laptop, signing into your bank, organizing a payment. And obviously, with the rollout of smartphones and apps on smartphones, that radically changed the game. And I suspect the vast majority of real-time payments today across the world are arranged now through a mobile phone and not through a desktop computer. So if you have a population that has benefited from the rollout of mobile phones and ultimately smartphones, then I think it can be a very powerful enabler for an economy. And what's interesting to me is that there are very strong corollaries with the rollout of mobile money initially, and now how we're seeing the rollout of real-time payments today across the world, because the use case development and the pathway tends to be very, very similar based on my personal observations. So I studied the rollout of mobile money first in around about 2014, 2015. And at the time, there were a few obviously standout successes that most people have heard of, like M-Pesa in Kenya, that had then started to spread to other African nations, and other mobile telephone network operators started to replicate that success in other parts of the world. And initially, I think a lot of it was achieved on quite simple Nokia phones. So they weren't smartphones, they weren't running apps, they didn't have large screens, they didn't have kind of that kind of internet-based technology that we are so familiar with. But they used simpler connectivity through different GSM standards. So GSM is the international standard for kind of global mobile communication. And effectively, a lot of those early use cases for mobile money were developed effectively with text messages and simple text-based interfaces using things called WAP, which are the wireless access protocol in the early days of what mobile internet could support. And that's been suitable in many parts of the developing world for some time. It allows you to facilitate just quite simple transactions, sending money to a specific mobile phone number or short code. So even with kind of non-smartphones, a lot of this mobile money effects could be achieved. And M-Pesa grew up originally because Vodacom, the Vodafone subsidiary that were running it, recognized that people were using their ability to transfer airtime between users in effect as a form of currency and a way of exchanging value. And so they quickly cottoned on to the fact that people were using this very simple ability through text messages to effectively send other people airtime credits, measured in minutes, not in shillings or anything like that. And that's how the kind of mobile financial services there started to develop. And so it wasn't really they built a specific real-time payments switch. It wasn't they built that particular capability. It was kind of what was inherent in the way that the mobile prepaid accounts were being managed by those mobile financial services providers. And so they went from being telcos to mobile financial services providers and never looked back. And what you see typically in development path is you start with person-to-person payments. Then when individuals get comfortable and they have trust in the system, they then start to expand into other use cases. Entrepreneurial kind of micro merchants start realizing that, well, if I can be paid or I can pay someone else using this method, then why can't I receive payments for the goods I sell at a local store or whatever it might be? So you begin to see person-to-merchant payments at the micro level. And then if the adoption becomes quite widespread, then larger companies and governments start to get involved in this space as well. And they start to use it as a way to send and receive money. And at that point, suddenly you find that you've got a kind of a whole mobile financial services economy. And then the government and the regulators get involved and realize because so much value is being exchanged, they need to think about this carefully. Need to understand what role this ecosystem has relative to the traditional banking sector, how it should be governed and potentially how it should be taxed, etc. And so that tends to be the development. The use cases are person to person, person to merchant, bill payments, B2B payments, government to consumer disbursements, and it tends to be quite a kind of linear process. With the rollout of real-time payments, what we're finding is that it can be used account to account, but it doesn't have to be a bank account to a bank account as we're used to doing in the developed world. There's nothing to stop that being a mobile money account on either side. Provided the right interfaces and integration points are built, then you effectively can do that. And it doesn't matter if it's a mobile money or a bank account on either side of the transaction, it will work. And one of the ways to do that is by having a proxy service that sits in the center as well as a real-time payment switch. And what the proxy service says is that I will resolve, if someone wants to send money to a mobile phone account number, so in other words, I don't need to know your bank details, I don't need to know the string of digits that represent your mobile money account, I just need to know your cell phone number. And what the proxy service does is say, you want to send to this mobile phone number, that mobile phone number equals this institution and this string of account numbers or letters, or whatever the system uses in your country. And so what it means is it makes it a lot simpler to address the recipient of funds, because it just happens to be a mobile phone number, which is probably in your mobile phone address book. And so you don't have to have all this complexity around routing numbers or IBANs or whatever the system uses to address an individual account, whether that be a mobile money account or a bank account. And so that proxy service tied to the real-time payment switch really makes the difference for me. And the leading example that we have as MasterCard is Prompt Pay in Thailand, where I think over 60 million people use that service. It's been built in less than 4 years. where it's got to 1.7 billion transactions a quarter. So it's running at just over 7 billion transactions a year, and it's doubling every year. It's an extremely successful scheme, and it's largely been drawn because the government had a strong e-payments 4.0 was what they called it, a strong policy agenda, which said they wanted to digitize the Thai economy, and that they took some steps as a government, not only in terms of customer education and literacy about this new service, but also by saying that certain government use cases would only use this method, i.e. if you want to receive a tax benefit, they would only pay it out through the prompt pay system, which obviously drove millions of people to sign up to the service because otherwise they wouldn't receive their benefits. And it's been, as I said, very successful in a very short space of time. It outstrips now faster payments over 2 to 1 in terms of volume, even though it's been running 4 years, and faster payments in the UK has been running 13 years. So it just goes to show how that can be done quite quickly. But I think what we find, Sarah, is you see this kind of real-time payment evolution in developing markets from traditionally existing a mobile phone scheme, which supports mobile financial services. And what it tends to be, it's not always, but it's often what's called a closed loop ecosystem. Because effectively it says that if I'm with this one mobile network operator, I can only transfer between other people on the same mobile phone network. And so, if I'm on Vodafone versus I'm on O2 versus I'm on EE in the UK, effectively it says the recipient has to be a mobile phone number on the same network as me.
Yeah, but we're seeing governments that are forcing interoperability. In Southeast Asia, at least, I start to see that.
Yeah, I think that's right. And I think you've got two ways, is what I'm coming on to say, is you can either force it purely at the mobile financial services level and say you 3, 4, whatever mobile phone networks, you have to achieve interoperability. And again, something like a proxy lookup or some form of mobile phone resolution service in the middle that says, you want to send this mobile phone number, I know that's with Vodacom, not with MTN or whatever it might be. Therefore, I'm going to send it to them, and then they will resolve it right down to the right account, mobile money holder. So you can either force interoperability at a mobile financial services level between the operators, or you could look for interoperability, which basically makes banks and mobile phone operators work together. And I think that's really, for me, the holy grail, because then you get true ubiquity and true use cases. And it means that mobile money isn't seen, or a mobile money account holder isn't seen as like a second-class citizen. It means they get to participate in the full financial services network. And I think that's what's really important. It's not interoperability just between mobile financial services operators, it's actually within all financial services operators. And that, for me, makes the real difference. And that's where I think a real-time payment switch, which is independent of whether it's a bank account or a mobile money account on either side of the transaction, is what adds real value. But what it means is it has to be able to cope with the full volume and the full value and the full set of use case to support that.
Okay. And is that technologically, to close this question, is that technologically difficult to have this real-time payment switch and this proxy service you've described?
It's not, I wouldn't say it's difficult.
Or expensive.
It doesn't have to be expensive. I think it depends on how it's created and how it's funded. You effectively have two obvious models. Either a central body procures that and runs it for themselves, and therefore they have to procure whatever the technology is, they have to build out the infrastructure, they have to invest in that way, but then they own it and run it for the benefit of the economy. But it requires investment by the national bodies to do that. Or you can effectively procure it as a managed service, which basically says someone else will do all the investment, someone else will build it all for you, and then you pay a small amount for every transaction thereafter.
Right.
And a managed service model, I think, gets a lot of traction in developing economies because they don't necessarily have the capital and the investment available to pay the ultimately tens of millions of dollars to build one of these things from scratch. And instead, they look to other people to basically provide it as a managed service and then pay us, a fraction of the payment for every transaction thereafter to that managed service provider. And so I think there's different models that can be done, but it's not difficult. It can be complex because it depends on the existing ecosystem, all the different players involved, and what you have to do is effectively build one central infrastructure that works for everybody. for every institution, for every use case. And the complexity and the difficulty can be because you have to replicate what's already existing as a national standard or as a national way of doing things. And that means that you can't just take an off-the-shelf solution because it has to be customized to fit the local requirements. So
Right.
that can be a source of complexity. The alternative way to do it is to say you take something off the shelf that works the way it does in a standardized way, but then all the nodes around that network then have to adopt that standard and have to change their systems around the periphery to make sure that that central infrastructure does what they want it to do. And so that's where, it requires a good understanding of what the trade-offs, I would say, are in that situation. Typically, my view is what happens is that the central infrastructure is installed locally to fit the local requirements, which perhaps elongates the process to build it initially with the central infrastructure, but it means all the participants don't have to do as much work.
Yeah,
And
got
then
it.
is in a later stage, people recognize the benefits of perhaps being part of a standardized system, which is also the same that is used in other parts of the world, and that allows for cross-border transactions to happen and it benefits from greater economies of scale because there's one system that's being supported by many different countries. And so what you find is that over time, the customized, localized solution matures into one that's more standardized with the rest of the international community.
So what you're saying is, in essence, is that the model that India has adopted with PCI seems to be a viable model for other emerging economies should governments be willing to take up the initial investment.
Yeah, I don't see why not. I think there are different ways to doing this. I think India has recognized with a extremely popular and successful rollout of NPCI that it's time now to have an alternative, have a second option as well, which is why we're now going through the kind of the new umbrella entity dialogue in that country, right? Which is to say, the first system may not be the only system, it may not be the best system, but it's been good for what we needed up till this point, and now we should look to the future about what we need next.
Okay, super fascinating. And I'm assuming these real-time payment system is only necessary if the mobile payment adoption is not very deep. Because as you explained, it comes to complement in order to facilitate payments between mobile accounts, but also between mobile and bank accounts, basically.
Yeah, but it could be that the original genesis of it is just to satisfy bank to bank account needs. I think you can have different
Yep.
journeys as an economy, right? It might be that it's there just to do bank account to bank account. It might be there that it's just to mobile account to mobile account, or it may be trying to bridge the two. And my personal opinion is the one that bridges the two is the one that's the most successful. It's perhaps more complex initially, but it drives far greater financial inclusion because it brings mobile money and bank money into greater proximity. And I think that means that more of the population get to participate in the real economy, and the opportunities that they have available to them are much greater as a result.
Fantastic. Thank you very much, James, for taking the time for such a detailed reply. I'll move now back to the audience to leave space for others.
No problems. Thank you, Sarah. Appreciate it. I'm going to butcher this. I'm sorry. Is it Oluwaseun? Please correct my pronunciation. Lovely to have you with us. Thanks for being so patient. And please let us know a little bit about you and where you're joining us from and your question or perspective, sir. Over to you.
Yeah, thank you. You actually did a great job. My name is Oluwaseun, and basically I have pretty much experience in fintech, also finance and investment as well. I currently live in Chicago, and I also have a small organization where we focus, where we try to support small-scale farmers. We try to see where there are loopholes in the agriculture sector, and we're trying to disrupt the HTech sector in Africa. My quick question is, with the fintech up on the rise and throughout the last year, 2020, and it was 2021. There's a lot of fintech development, fintech P2P payment apps that are kind of all up on the rise in Africa. So my question is centered around the fact that, okay, taking a look at this fintech that are just springing forth in 2020 and advanced, how do you think this is going to affect trade automation, also trade performance, AI, and also impact trading professionals in the future, looking at what we are seeing now with the fintech disrupting the market?
Thanks for the question. So I think there is some real opportunity to improve how trade and trade finance works. And I think it happens. I think the opportunities exist on multiple levels. It's not an area I'm particularly knowledgeable in, if I'm honest with you. But from the outside, I see a few challenges. First and foremost, for me, because of where I work and how I think about payments, the existing model for arranging payments, typically cross-border in the context of trade, for me is fundamentally broken. The way that transactions are typically arranged cross-border is through what's called correspondent banking. And correspondent banking, as the name describes, is a very manual process. And what it requires is a number of banks to basically communicate with each other across a chain of transactions that allow money to move from, let's say, your account in Chicago to my account in the UK. And it can take days. The amount that is received at the other end is often uncertain because of fees and foreign exchange that's achieved across the transactions. The data that should accompany that transaction might get truncated or lost. And ultimately, for me, that part of trade finance and international trade is very bad. And I think there's a huge amount that can be done to improve just the payment part of that process. Second of all, if I take it up a notch, I think there is limited understanding and public information about trading partners, which means understanding the risk involved in an international transaction between two entities, two organizations, one buyer, one seller, means that actually understanding, what is the risk to this transaction, what is the risk of doing this trade, is often poorly understood, and people end up having to buy insurance or some form of, letter of credit, some other method to effectively prepare and protect an international trade transaction. And then the third element for me is all the logistics that typically go alongside trade, and whether all the difference between shipping and customs and organizing, transport from point to point. That also strikes me as something that is still quite a manual and intensive process. And I know a number of tech firms, potentially fintech firms, that are trying to solve for that part of the process as well. So for me, it's a rich space with lots of opportunities within it. I think it doesn't get as much attention and potentially not as much investment as it deserves, because it's not a space that is well understood by entrepreneurs or by investors. And it's also very complex because you have to manage multiple jurisdictions. Effectively, to be a universal and valuable player in this space, you need to kind of be able to support anybody anywhere. And that makes it very hard because you have to be able to cope with multiple market regulations, jurisdictions, laws, customs, practices, etc. So I think it's a very difficult space to penetrate. And I don't think there are as many people that feel confident or as competent as perhaps we need focused on this problem. I don't know if that helps to start with, honestly, and I'm very happy to go deep on any of those aspects, but that's kind of my initial thoughts on this.
Thank you, James. It's actually interesting you mentioned that because, but One question I would like to ask before I proceed with an experience that I have is, what do you think about the future of in that space? What do you think about the future of P2P to as a cross-border transactions to different jurisdiction countries? For example, if looking at the data for diasporans to Africa and Nigeria, to be specific, about 326 billion was remitted in dollars to Nigeria. So there's a big in terms of people trying to trade, sending money to the families back home. So there's a kind of gap in the P2P market and in the fintech world in terms of cross-border transaction. Like you mentioned, it's a rich kind of space to invest in. But do you think there's an holistic approach to see the bigger picture on that space? The second interjection I would like to make is from what you said. I have because I'm an impact investor as well. I also have a small organization where we're trying to where we empower small scale farmers, and we're trying to bring in investors to see what we are doing and how the methods and the steps we're taking. So, but we saw the space there with your analysis and with your experience, what you just said. We kind of saw the challenges in the field, and we took too many to step forward. Then we realized our lessons and failures. We had to take too many steps back. So, it was right when you said that. But I'd like you to share more experience or share your thoughts on what you think about the space. Do you think there can be more holistic approach to see feeds to the cross-border transaction space of fintech to for diasporans and those the ones that have been coming up to for within the space of the diasporans and within the space of the fintech upright disrupting the market?
Sure. Yeah, sure. So I think there are a lot of people focused on challenges in diaspora, and it's a natural place to start. I think if you experience those challenges for yourself, you can understand that you have a community of people that suffer the same challenges. Then I think looking for specific corridors, if I can call them that, between a market that you know well and the main markets in which the diaspora live today, then those are the natural places to start to build a business. And I think there are some very obvious corridors that exist that you can probably go after. So US to Nigeria makes a lot of sense to me, for example, as you will find. Similarly, US Mexico would be one. You'll probably find some from the Middle East towards Southeast Asia, for example, and so on and so forth. So I think if you have a good understanding of the specific challenges in a specific set of markets, it gives you a firm foundation to try and solve that problem. And if you're going to build a global cross-border payment capability or solution, you've got to start somewhere. If you try and do everything at once, I think you'll struggle. And if I look at some of the existing fintechs in this space that have started to tackle these challenges, TransferWise or now called Wise in the UK is one I'm familiar with, as is WorldRemit. Or Remitly or World First. There are a series of fintechs that are focused on this problem, and similar to the mobile money and kind of real-time payment rollout examples I gave earlier, they tend to focus first and foremost on the person-to-person market because it's probably the simplest and easiest to understand. It's probably the least complex to deliver, and those businesses, I think, have been built largely on solving for person-to-person remittances cross-border, which over time they then got to a certain level of scale and understanding, and they've started to then move into solving some of these cross-border challenges for businesses. And so there's a kind of a natural, I guess, progression path. In terms of the degree to which this is being looked at and solved for holistically, there are signals that is, that people are beginning to get organized to do this in a bigger and bolder way. Visa bought a company called Earthport. MasterCard bought a business called Transfast. And I think the fact that the global networks continue to invest in cross-border assets suggests to me that they're thinking about how can they solve for some of these cross-border challenges in a way that they've not been able to solve for them so far just by using the existing card infrastructure. And you also see some efforts from the industry as a whole to start thinking about this as well. We mentioned earlier that often how payment systems grow up, they tend to be built by national governments and regulators and central banks to solve domestic needs. And so bit by bit, they all build their own thing and do it their own way to reflect the local situation, the cultural norms around payments, whatever it might be. And so you end up with every country having a slightly different payment system doing their thing. What we have now is increasing degrees of standardization creeping into the payment markets, both at a domestic and at an international level. And we talked about on last week's show this standard called ISO 20022. So ISO, the International Standards Organization, and the 5-digit number is 20022. And what that allows for is to set a set of financial messaging standards for payments that should be ubiquitous and adopted by everybody around the world. And when we've done that, then I think the ability to process payments cross-border and some of the challenges that we mentioned of correspondent banking earlier will begin to be eroded, and we'll have the opportunity for much greater coordination and collaboration between individual nations to facilitate what I hope, for me, it's nirvana, but I see the signals already for real-time payments cross-border. In effect, it should be possible if I can send, you a message in Chicago using WhatsApp, or I can place an order in Amazon and have something delivered to your house the same day. Why can't I do the same with money? And I think that's what we're working towards. The challenge at the moment is a lot of those cross-border networks are being built, again, like the mobile money example, closed loop. So I can facilitate maybe a WhatsApp payment with a user in one country to a WhatsApp user in another country. But I don't necessarily have the ability to do it from, WhatsApp to Signal or to some other messaging app that I might use that's with a different company. And what ISO 20022 should be able to achieve is that we can have interoperability between lots of different payment systems using the same standard messaging and effectively achieving greater liquidity and greater movement of money across the globe. The fundamental challenge remains around foreign exchange. And the other key issue in this space as well is compliance with laws regarding anti-money laundering and counter-terrorist financing, or so-called know your customer KYC checks. And what we also, I think, will need is not only the ability for the money to move cross-border, but the money to be moved with some form of assurances around identity that allow various checks to be performed in real time, so that people are comfortable that the system is being used for good and not for bad. And I think that's the other element to this that will need to be worked on holistically to your question to achieve this. I think we are going to be working on that through most of the 2020s, if I'm honest with you. And I think that creates plenty of opportunities for fintechs to solve parts or some of that problem end to end potentially if they're big and bold enough. But there's a number of kind of intrinsic issues that exist that have to be solved for. And I think there are players looking at it holistically, but I don't think it's going to happen overnight. And I think in the meantime, there's plenty of opportunities for fintech and payments companies to start and scale during that period. I hope that helps, Sean.
Absolutely, that do help. That really, you actually hit the nail on the head on some of the part some of the major part, and I truly that resonate with also what I'm doing. Another thing that you mentioned is the scope of the WhatsApp payment. If you could send me a text from the UK to Chicago, and why can't you as well do the same thing on being able to send like cash to your family using WhatsApp? I think that question and that conversation is actually ongoing with big tech developers and P2P, fintech guys. I think there's a coalition of conversation like that ongoing. But I see that also happening in the near future. And I'm glad that you were able to explain further on some of the major challenges and, the, holistic future approach that is going to happen in the future in that space. Thank you.
You're most welcome. You're most welcome. And obviously we haven't talked about digital currencies here, which is the other obvious elephant in the room, right? But I think digital currencies have an opportunity to take away some of the friction, but they have the potential to create more liquidity in corridors which are otherwise known as exotics. So if I want to move, for example, I used this example last time and someone shot me down because it actually was quite a popular example, but anyway, I'll use it anyway. If someone wanted to send, for example, money from Peru to Kenya, you might find that the market for the exchanging Peruvian sols into Kenyan shillings there weren't many trades. If there aren't many trades, then the bid-ask spread, the kind of the money I get for buying versus the money I get for selling, they're quite far apart, which means that I lose quite a lot of value in the exchange because if it's a narrow spread, then I use very little in the FX exchange. But if it's a wide spread, then I potentially lose quite a bit of value in doing that trade. And so one of the arguments for some of the early digital currencies was that they would be the kind of de facto liquidity provider. And instead of having to find a market to exchange Peruvian sols into Kenyan shillings, I find one that converts Peruvian sols into ABC, whatever ABC is, and then ABC is something that's used universally, and then I then do ABCs into Kenyan shillings, and in so doing, I would narrow. Even though I was now doing two transactions rather than one, this was now going to be a cheaper and more efficient way to move value. And I have a lot of sympathy with that view. I think there is quite a bit of potential for digital currencies to do that. But there's quite a wide spectrum of digital currencies, as you can imagine, with proponents and detractors across the spectrum. And for me, I think as a medium of exchange, you probably want that kind of middle currency, the ABC, probably to be a stable coin of some sort, which gives you some stability in pricing and allows that transaction to be arranged more readily. But what it does require, though,
if I may, there's a company you could look up that's called BitPesa. You probably know it. It operates in Africa and is the largest not bank forex remittance players that is using the blockchain and cryptocurrencies.
Yes, I actually know about it, but my problem and the question I would like to ask is, in Africa there are different countries with different regulations to different methods of acceptance of payment, right? For example, right now in Nigeria, initially the idea to use Bitcoin or cryptocurrency for exchange of money was in there. I think it was actually in the system for like about 3 months, about 6 months. But the government came up with rules and regulations to cancel that platform. To say, okay, we are not using cryptocurrencies. We are not taking we're not doing any exchange means using cryptocurrency, and that actually disrupt and actually disband a lot of P2P growing firms in Nigeria. So I get that. I'm aware about that. But to what end do we see the larger scale? Are we seeing like it growing to the fact that in the future, these countries will have to accept that, hey, this has come to stay. Either you like it or not, it's going to continue to grow. And if you want to grow, you have to be able to adopt this kind of system because it's a better way to, approach the market in terms of making things easy in terms of the payment system. What do you think, James?
Sean, yeah. So I've spoken with others that have also explained to me this challenge that in Nigeria is an example where effectively some of these early efforts in bringing digital currencies and crypto into the mix have been frustrated because they've not been received warmly by government and regulators in the market. And so you've had some kind of, I guess, some false starts, if we can put them that way, where people have started to explore the opportunities and then been frustrated because they've effectively been outlawed, they've been banned. And so I do feel that we're going to be in this, potentially in this kind of stop-start situation for a little while, as new innovations hit the market and then new regulations catch up. I think it's, you've got different attitudes clearly to digital currency more broadly across the world. You've got some examples where governments and central banks are actively promoting digital currency, actively researching it and identifying the opportunities and the problems it could potentially solve. And for me, I think what you need is a established sector with regulatory approval that provides efficient and useful kind of on-ramps and off-ramps, if we can use that analogy. Effectively, what you need is a series of competitive and well-regulated exchanges that can bridge the gap between fiat and digital currencies. And I see the beginnings of that in different parts of the world, but it's by no means universal and ubiquitous. And I know that some governments really do fear the challenges created by digital currencies where they are not in control. And that may be where they have concerns about, they have existing currency controls in their market, where they're trying to stem the tide of movement of money cross-border. It may be because they fear the impact it may have on their ability to affect monetary policy, because effectively, if more and more of their citizens, businesses, etc., start to use a currency which they don't control, then their ability to regulate, their ability to tax, their ability to effectively observe transactions in the market begin to be diminished. So I sympathize to some degree with governments and regulators in developing markets because they may fear that that loss of sovereignty, to put it a different way, because of the inroads that have been made by digital currencies. And I think this is going to get harder before it gets easier, if I'm honest with you, with more central bank digital currencies being created and more digital giants acting and entering into this space, because the amount of influence they could have externally on a developing market could be considerable. So I do have sympathy with that regulatory and government perspective. But I don't think that is a long-term sustainable position, an outright ban. I just don't think it's practical. I think the best route forward is to actively engage and to regulate the industry, not ban it. And that, I think, is just it's a question of the stage of maturity. And I think it will take time as people become more comfortable with the concepts. And I think it will be something that gets solved overall. I think I'm personally bearish on some of the existing cryptocurrencies, particularly crypto assets that are in the market today. But I am bullish. I am long term. I believe in the value of digital currencies, particularly stablecoins. I think they can solve a number of payment problems that exist today. I'm just not sure the ones that people are speculating on today are going to be the long-term survivors, if I'm honest with you. So just my personal opinion, but I see a long-term future for digital currencies, but I see them more in the realm of stable coins than I do in decentralized and fluctuating crypto assets.
Thank you,
So
James.
Sean, I
Thank
think
you.
No problem. I wasn't going to go down a deep crypto rabbit hole on this one, but
Okay.
I do see the challenge that is popping up around the world. But I think that the best way to go forward is through regulated on ramps and off ramps, and I think the benefits that those will bring to a national economy ultimately will be more than the costs. But it does take a degree of regulation and regulatory maturity to get to that mindset and to find out how it's both most going to work from for a given local economy. But I think the opportunity will continue to exist to kind of do it unofficially. It's just going to be a question of to what degree can those close. If there are no off ramps and on ramps, you get back to the closed system problem that we've talked about earlier. And then it's just a question to what degree does that closed system begin to grow because it becomes useful in its own right. And therefore, interoperability becomes a secondary concern because everyone starts to accept and trade in whichever popular digital currency emerges. And at that point, I think as a government and a regulator, I think you realize you probably lost the battle and therefore you need to adopt it rather than ban it. And I think the same experience that we've seen in Africa with mobile money will probably come through in the digital currency world. I think we'll probably see the same pattern repeating.
Yeah, thank you so much, James. I think you actually nailed most of the difficult part. And yeah, those are the changes that we're looking forward to. I believe there's also going to be a bigger change in future with, the regulations. I think, of course, medium of exchange with cryptocurrency is definitely going to come to stay. So it's just going to take a little more time, but it's definitely going to come to stay. So thank you for your insights on that. Thank you.
You're most welcome. I'll do a quick room reset, and then David Enoch and
James, can I ask a question related to what you just said?
yeah,
Yeah,
Peter, can you hold
yeah.
quiet 1 sec? I just want to do a room reset, and we'll come to you if it's related to this question. But also, I think David and Enoch also joined during this period, so I want to make sure that if they've got something on point, that they want to have the opportunity as well. So, good morning or good day, everyone, wherever you are in the world. Welcome to Fintech and Payments Club. This is Sunday Surgery. We've just been running for about 80 minutes so far. It's an Ask Me Anything style show. Anyone is welcome to raise a hand and join the stage, and we'll hopefully come to you in turn. Fintech and Payments Club is a top 40 club ranked by members on Clubhouse. We're 34,000 members and followers growing every day. The membership is open and inclusive, and anyone who'd like to be a member is more than welcome to be one. All we do is just simply ask you visit our website, FintechAndPayments.Club, and just click join and register with us. The benefit of registering with us is we get to know a little bit more about you and what your tastes and preferences are. One of the challenges we have in running a club on Clubhouse right now is because it's an early stage product, we have very, very little information about who our members and followers are and what they'd like to participate in the future. We don't know which time zone you're in, which country you're in, which language you speak, which areas of fintech and payments really interest you. So if you'd like to help us put on kind of more relevant and interesting events for you, we'd be enormously grateful if you register with us and you go through that registration process. We'll invite you to be a member because at that point we'll know who you are. That's the simple piece from me. We are about a team of 20 volunteers giving back to the community. We do this really just to facilitate great discussion and learn more about the world. The rationale behind Fintech and Payments Club is really just to help people learn more about money and how money works. My personal interest and passion is about improving financial education and literacy. I just want more people where money works for them rather than them working for money. And we cover currently, we have team members all the way from the west coast of the USA through to Singapore and to Australia and all the places in between. And if you are interested in being a moderator or volunteering with us, we'd love to hear from you also. Again, just check out FintechAndPayments.Club, look at the join menu, and there'll be something about joining the team. You can learn more about the team ethos and our moderator guidelines and how to become a moderator through that webpage. And if that's interesting to you, just fill in the short application form and we'll be in touch. That's my room reset. Other than to say, if you have a burning question, but you're in a noisy place, or you don't want to come up on stage because you want to ask a question anonymously, we have a solution for you. It's called Slido. just go to sli.do on your internet browser and use the event code, which is the hashtag at the end of the room title, hashtag SS16M, so Sunday Surgery 16th May. And then you can find the specific pages. There's a live poll at the moment which says, how did you find the room today? We're all about discovery and learning how our social media efforts are helping people find our room. And then separately, there's a Q&A tab where you can ask any question you'd like. You can ask it anonymously, and you can vote on any other questions in the queue. And we'll come to those in due course, depending on how many people we have on stage. We love live participation on stage where available, but I will oscillate between Slido and a question on stage where available. That's the room reset from me. Peter, you're kind of third in the queue here between David and Enoch. David and Enoch, do you have a question related to this particular topic you wanted to bring in? Otherwise, we'll go to Peter as it's live against this exact discussion. David, I see you unmuting. Please go ahead. A couple of sentences about yourself, maybe where you're joining us from in the world, and your question and perspective on this.
Yeah. Hi, James. Yes, this is David. I'm from China. I'm from running a Fintech company. So my question is, I have been listening to you since 2 p.m. my time. So my question is, I really agree with you that there are the account-based payment acceptance will have lots of advantages for digitize the business, to give lots of values to the customers, no matter for the for shopping. For the the delivery service, digitize. There are lots of the education, lots of the areas, and now if you look at today the developed markets, it's still card pay, offline based mostly. So how do you think the main issue to that is slow down this and I also heard that Mastercard is having ISO 20022. Is this platform that to address this issue, or it's this platform is to is for money transfer? Because if it's for acceptance, there going to be the merchants onboarding and settlements issue. So this is the first question. Second question is about the recently the soft POS has been quite a hot topic with among the banks. So how do you see the soft POS tap on phone would be going? I see the certification cost with the soft POS is quite high for some of the small banks. Yeah, that's my question. Thanks.
Thanks, David. Yeah, quite a few good questions there. I'll try and unpack them as best I can, and maybe do a bit of explanation for different people in the audience, depending on how familiar they are with some of these terms. So I think we kind of have to think about payments across the different layers that make it happen. One of them is the interface, which is to say, how do I, as a payer, interface with the payee, or whether I'm a customer buying from a merchant, or a business buying from a government, whatever it might be. And so the interface piece is one element to this, so it might be using something optical. So I could be, for example, using my smartphone camera to scan a QR code, or vice versa. It could be through a physical interface, like me putting my card inside a terminal where it reads the chip, or I do a mag stripe transaction, if it's old school, like what exists in the USA still today. Or it could be through some form of near-field communication, NFC, which is like a radio frequency exchange between devices. Or it could just be the simple internet, where I've got some way of interfacing directly over the internet to facilitate a transaction. So interface is kind of, for me, the kind of top layer, which is how does the consumer and merchant communicate initially to initialize a transaction and facilitate a payment. You've then potentially got a couple of layers in between, but I think the next important one becomes what are the inverted commas, the rails, which is am I going to use the card network? Am I going to use an account to account network? Am I going to use a blockchain or something like that? And then underneath that, then is data standards and messaging. So, if the card network are the pipes, what is the data that goes through those pipes? How is that formatted, and how is that constructed in a way that participants at either end of the pipe can understand each other and kind of speak the same language, so to speak? And SoftPOS, if I jump to that one first and foremost, SoftPOS is interesting because effectively it says I don't need to have a specific piece of hardware that's configured only to do, say, card transactions. I can just use my phone. If my phone has the ability to arrange a transaction through an interface, be it internet or maybe in near-field communication like contactless cards use, or using Bluetooth or whatever it might be, right? Effectively, there's a method by which, we can bump smartphones, and one device becomes the sending device for payment and one becomes the receiving device for payment. And a transaction can be arranged in that way. And that's obviously attractive because it means you don't have to have the expense of specific physical hardware. That hopefully you can just play to the ubiquity of the fact that increasingly everyone has a smartphone in their pocket, and therefore every smartphone becomes effectively a payment terminal. And that's quite exciting, I think, because it allows a variety of different ways to pay that could sit underneath it. So we can kind of nail the interface, which is us bumping phones, and it doesn't really matter how that mechanic works. We just have a way of communicating with each other to arrange a payment. For me, it then allows a much richer set of interaction can occur between the payee and the payer, the sender and the receiver, because our phones in proximity could exchange a vast amount of data if that's what we wanted them to do. So that's exciting, and I think what really comes down to what can be supported and by when is going to be a question of willingness of participants to adhere to a set of standards, and for a set of standards to exist that they want to adhere to. And the card networks are the bastions to date of scheme rules, these sets of standards that say this is how a transaction occurs, these are all the ways that things should work on a happy path, and if things go wrong, these are all the things that happen if something goes wrong, to provide trust and safety and security within that system. Now, that's not to say that someone else can't usurp the position of the card networks, and we only have to look to China for examples of that with Alipay and WeChat and things like that, where effectively a large network of buyers and sellers have been created that allows that network then to create their own scheme rules, their own sets of standards that allow transactions to happen. And there is obviously potential for digital giants to do the same, whether they be in China or anywhere else in the world. So I think there is the opportunity is there for the Apples, the Googles, etc. of this world to also step into this space if they want to. And I think we will see them do that in markets where there isn't an existing set of very well established payment methods, where they have the opportunity to be the de facto payment method because nothing really is there. There's a bit of a void for them to step into. And I think we can see that in certain parts of the world, in the developing world, where effectively they can quickly establish themselves as the way that people pay. In other markets where there are already very well established ways to pay, you see them partnering and using existing methods and piggybacking on those to start to gain relevance and experience in consumers' minds that they are another way that you can pay. And I think you only have to look to Google Pay and Android Pay and Apple Pay and all the other X-Pays that exist around the world, which are largely digital giants putting themselves into a transaction, but largely piggybacking on the existing transaction capabilities that exist, which are predominantly card. I see this step one in a multi-step game, but it allows them to effectively, rather than have to build something from scratch to educate consumers and to replace an existing behavior that is very well held and deeply held, it's probably easier to partner with what's already exists than trying to establish something new. And so I think that's what we'll see developing in the soft POS market, where you can establish a new way, you will do that. So that's maybe QR code based, or it's NFC, or it's Bluetooth, whatever the means of exchange will be. If there's a void to be filled, I think we will see digital giants fill that void. If there's already an existing way to pay that's well entrenched in the market and is highly popular, then I think we'll expect them to use what's already there and use that as their opening salvo into what I expect will be a much longer war for payments dominance. So that's kind of my quick take on soft POS, David. But I think the process of certification and all those sorts of things, I think, will be probably quite cumbersome and quite difficult, and maybe expensive to start with, as new standards get established and new understanding is established. But I expect that to be quickly competed away. And ultimately, if it's not, then people will choose alternatives that will bypass any cumbersome regulation or certification processes, because there'll be another way they can do it, which is far easier and pain-free.
Yeah, and tap on phone, it can only do the small amount. If it's a large amount, a PIN would be still required. So that cannot fit all the scenarios.
That again depends on rules. So, for example, in the UK, at the moment, when contactless first was available, and I was tapping my card on a terminal, only transactions up to a small value were allowed. Bit by bit, that transaction value has gone up for my card. But now I've got to the stage where if I'm using my smartphone and I'm using some form of additional security to log into my phone, whether that be my thumbprint for Touch ID on an Apple system, or Face ID, or whatever the equivalents are in other ecosystems, that often provides a higher degree of security and certainty that I am who I am, which allows an unlimited transaction value to be processed. So I can do any amount using my smartphone by tapping on a merchant terminal today. If the merchant supports it and I'm comfortable doing that, I can buy something for £10,000 or higher using a contactless transaction in the UK, if that's what I want to do.
Okay, yeah, great. Sorry, there is one question that I think you missed to answer, which is for the new spec that Masca is making, that ISO 20022. That I remember you mentioned that. So is this one going to be a platform? Is for transfer, or it can also be used for merchant acceptance?
Sure. Yeah, thanks for the reminder. So 8583, ISO 8583 was the original payment standard for card transactions, and was used increasingly for ATMs and also for existing account-to-account payment methods. So 8583 is ISO 8583 is the dominant standard in payments today. Account-to-account systems are now the modern ones being deployed today. Support 20022. And the difference between these two standards largely is 20022 is an extensible data set. It's far more structured, it's much larger, and it's potentially infinite in size in the way that you construct it. Because effectively what you can do is you could carry almost like a URL in the message, and the URL could then access a much bigger data set if that's what you wanted it to do. In the UK, for example, ISO 20022 is used as the data set behind what's called ICS, an image-based check clearing system. And effectively, alongside the payment, when you take an image of a check now using your smartphone to pay it in virtually, not only is all the encoded data from the check being passed in the message, but also an image of the check itself. So it's a much, much larger extensible data format. You could be measuring in kilobytes or megabytes versus a few hundred bytes, which is supported by 8583. So it's a much richer data set. And that's going to be, I think, largely deployed on new rails, like account-to-account rails. And there are some coins, some blockchain and digital currencies that also support ISO 20022 today. And so this is going to be, I think, one of the advantages of these systems as they are rolled out. They will support a great deal more data alongside the message. And what it means is that payment networks, I think, will evolve into value networks, in that value is made up of both money and data. And I think what's going to be interesting here is that the exchange of data, I think, is going to become increasingly valuable. And from my personal perspective, I think we're on a journey to where actually, instead of me paying for an account-to-account system to move money between my account and someone else's account, in some parts of the world, we're already at the free point from an end-user perspective. I think we could potentially start entering a world in due course where I am paid for moving my money with a chosen network, because that chosen network wants to see my data and they will incentivize me to use them instead of somebody else. And so I think we'll get to the point where the cost of payments will go negative, because people will be subsidizing networks and paying me to move money from me to somebody else through their network, because they want to see the data inside, because the data will become rich and the data become valuable. And further, these value networks could also work as exchanges of data without actually exchanges of money. So there are already message types that have been created for these standards, which support a request for information or a request for payment. Effectively, they are messages being sent through that infrastructure to say, I need to know something before I'll do something else. And they become a kind of if this then that type network that allows structured data to be surpassed for kind of almost smarter ERP systems to be built, potentially smart contracts to be built through using the ISO 20022 message format, because they just support a much wider set of use cases and support a much richer set of data.
Great. So this is going to be a rollout in which region, and when you see this going to be ready?
Yeah, so it already exists in different parts of the world. So as I mentioned, there's the image-based check clearing system in the UK, already uses 20022. And there are a number of national domestic account-to-account systems that already support 20022 today. So some examples would be real-time payments through the clearinghouse in the United States of America. They have a ISO 20022 real-time payment system. The same in Singapore for FAST. They use ISO 20022. There's a whole host of different countries around the world that already support domestic account-to-account payments using this standard. I would say in most cases, it's still early days. They're still developing their ecosystems in terms of what they can do with this technology. But it is becoming the de facto standard for real-time payments. And as more countries choose to modernize their payment infrastructure, it's not just about speed, real-time payments, but it's also about the depth of data that can be carried through those networks through the ISO 20022 standard. The other key, I think, point to raise here, David, is that SWIFT, which is the interbank messaging service, which supports correspondent banking and cross-border payments, they are on a journey to 20022. And so they will be adopting this standard. And in so doing, any bank that wants to participate in the SWIFT network, which is pretty much all the banks that want to do cross-border payments, will have to be 20022 compliant. So you're not only going to see 20022 being established at a domestic level, you'll also see it established at an international cross-border level also.
Okay, that's very cool. Thank you.
No problem at all. Sarah, I saw you wanted to chime in here briefly.
Yeah, I wanted to comment on very briefly to leave space for others, but on the fact that you might end up being paid and the cost of payment might end up being negative, so that the payment carrier or processor might see your data. I think this is exactly the point that I was tending towards in my earlier question. In emerging markets, we see that the payment processors are slowly starting to monetize their data, first by partnering with lenders, not necessarily banks, but more generally fintech. They monetize the data. and some of them are starting to raise money to start their own lending program. And usually it starts with small merchants or high-end consumers. But we very much see this trend because, and this is a point you've touched upon earlier, the margins for the payment processors are getting very compressed due to regulation, who have an incentive to digitize the economy generally in emerging markets to reduce the cash in the system. So I love this idea and the way you've put it in the negative cost for payment. So thank you very much for that.
No, you're most welcome, and that's I think that is the reality, and I think we're seeing it in the developed world as well. You only have to look at somewhere like PayPal or Amazon to see that, you know, they've been doing a lot of payment processing for a long time, often for free for individuals, and now they have data that they can start extending finance terms.
Yeah.
So increasingly, I get to the point where, you know, I might go to pay with PayPal, and they're saying, "Hey, do you want to use our PayPal credit service?" And are trying to get me to use that as a way to start me on a stepping stone towards borrowing, so they can earn margin through that process instead. And I suspect they feel comfortable maybe extending credit to me because I've built up a profile of transactions, which give them some insight in terms of saying that I might be a good credit risk, and so are willing to do that.
Exactly. Another point I wanted to quickly add on, I think, what David said regarding the limited amount that you can pay through an MPOS acceptor is the combination of the MPOS with a thumb reader for those countries that have the digitized identity database that allows to uniquely identify someone with a thumbprint. So I've seen that in India and in Vietnam, for example, and that allows you to increase the amount to be paid through an MPOS application at the merchant.
Yeah, that follows. It's kind of the corollary to, you know, me using my Touch ID or Face ID on my smartphone, right? It basically says, I have greater confidence that this person is who they say they are originating this transaction, and therefore I'm comfortable as a payment network or as a merchant for accepting a payment of a higher value.
Yeah, exactly. And obviously, because the dongle, the thumbprint reader, is very cheap, that seems to be, again, in countries where most of the population is not carded, it seems to be a very viable proposition, at least for the next decade, to accelerate digital payment acceptance.
Yeah, I think so. I think there's still a lot of road to travel. I think, you know, 85% of the world, you know, transactions are still in cash. So, you know, there's a lot of opportunity here for these methods to grow, and not only in the amount that they can do as an individual transaction, but most importantly in terms of the number of individuals that they can serve. So no, I totally agree.
And the standards that you've mentioned, James, I'm assuming is not a big deal for the agent networks or the acceptance networks to plug into, provided those standards exist.
Yeah, I mean, for them, it should just be something that's happening in the background, right, with the next upgrade, right? There is nothing inherent, I think, in the interface or the terminal that says they cannot support a richer data method. It's really just a question of what do you want that data to contain, and therefore, is it being captured readily at the point of sale? And the only thing there that in the back of my mind would make that harder to achieve would be if it's not just going to be about encoding the information necessary for the payment, but for some wider context around the payment, then you may need more interfaces to make that successful, or you continue to process, you know, a limited set of truncated data. So, for example, if I was in an e-commerce journey and I put a load of different goods in my basket, and then I go to checkout and I then pay for whatever's in my shopping cart, there's nothing to stop my shopping cart being encoded and sent with the transaction through the messages, right? So you had like what's called SKU level data, right? Stock control unit data, you know, so the individual items that I purchased, maybe their individual prices, maybe the, you know, even the serial numbers of the items I purchased, right, could all go through in that encoded payment message under an ISO 20022 standard. So that's easy maybe to achieve in an e-commerce transaction. In a physical point of commerce transaction, it would require probably greater levels of integration between the POS machine that does the payment terminal and the actual cashier's register.
Yeah.
So that instead of all that data only being printed out on a paper receipt, it was carried over into the payment terminal, encoded in a nice 2082 message and sent out that way. So it may be that sort of information, or if, for example, it was a secure hashing of my thumbprint, for example, because I put my thumb on the terminal, if I wanted to send that with a message, then obviously it requires a certain level of greater software integration to facilitate that. But it would be one of those things, I think, that would only increase over time. That people realize the value of doing this, that there was a mechanism to achieve it, that would just be a natural evolution of the technology as terminals get upgraded.
Yeah, absolutely. And here again, what I see is the emergence, and here I've seen that in Indonesia and India, the emergence of a digital ledger that allow exactly to do what you've said, which is when there is a digital sale to know what is in the shopping cart of the buyer.
Hi.
Makes sense.
Thanks, James and Sarah. I think this is really interesting because I'm from India. I'm right now in Scotland, but my career started in India, and I was looking at the problems when Paytm first came in. And I was thinking that we are talking about the payment processing, the transaction layer almost. Can we also think about bringing this down a layer deeper, which is more like a credit worthiness or a credit scoring mechanism, which is, for example, we have, as James, you said, the SKU level data, and we can almost, using that hash function, create a unique identity for everyone without needing them to be having a credit card or a bank or a KYC type scenario which is tied around the bank. Can we build a credit scoring system that does not require someone having a specific bank account, because we already know that we can uniquely identify the hash of their fingerprints, for example?
Yeah, I think that's definitely possible, Govind. So I think there's a couple of things that would have to happen to make that work. I think one, you're right, there would have to be something that identifies the individual that's passed along with the transaction and says, again, this is not necessarily saying specifically this is Govind, but this is a string of letters and numbers that represent Govind uniquely. And so that anyone handling that data doesn't need to know that it's Govind, they just need to know that tokenized identity. But Govind has the ability to then go and access all Govind's transactions, regardless of who the bank was, who the merchant was, which payment method he used. Doesn't matter. There's now a cluster of data that Govind can put his hand up and say, that's me. And this is my token, and therefore unlocks all that information, and you can extract all that information. And that would then allow someone to create a credit profile based on your transactional history. So I think that's entirely feasible. It requires a couple of things to work. One is creating a standard that says whenever and anyone someone pays, this is the tokenized identity information that we pass along with the payment message, so that all of Govind's transactions in the future can be reassembled. Second of all, it requires a open data method that allows Govind to present himself and say, hey, I want to see all my data on my transactions, please, because I want to come to view with a third party about whether I'm creditworthy or not. And so you need effectively some form of not only central database of tokenized transactions, but also an interface that allows Govind to present himself and says, this is me, and therefore give me my data. And then obviously within that, you need all the organizations participating to recognize that it is Govind's data, not theirs, and that Govind should have access to all that information on demand. And then the last thing, of course, you need is therefore an independent third party or whoever it might be, where Govind can go, here is all my data that I've extracted from the payment systems. These are all my transactions. Now tell me, am I creditworthy or not? And I think that's all possible technically. Organizationally and politically is probably where the challenges lie.
Exactly, and I think this is where the challenges, because my conversations with insurance companies and banks in India have been around. They are bleeding money. They're paying very high level of subscription fees to the third party data collectors like LexisNexis and Experian, and they want to get away from it. But there is no singular mechanism, because there is a fear that even if a single party starts this kind of consortium or some initiative where they start sharing the data on a collective basis where everybody trusts it, the fear that starts coming in is whoever gets in gets an early advantage. So I think this has to be a bit of a regulatory mechanism that needs to be in place that allows this kind of structure to build. Because I am from insurance predominantly, and in India, it's a great opportunity for insurance because at the moment, there's just 3.8% of the population have access to that. And the reason why others do not have access to it is because they don't have the capabilities in terms of they might have unique identification on bank account, but they don't have the understanding of how to go through a normal KYC. And a lot of people also go through scams because they are told to provide their KYC information, and they ended up getting scammed. So if we have this kind of system, which, as you said, which is the most important thing, James, you said that it doesn't have to uniquely identify me when I'm transacting or when I'm sharing the data. I should be able to prove that that identity belongs to me through my fingerprint. And so that it's not going to be the case where if I say that to an ex party who I don't trust, I lose all my personal data to them. It's that kind of separation of a reality as well that's possible, that can enable the next platform that can bring the remaining 96.2% of population access to products like insurance and
Yeah, that makes total sense to me, Govind. And I think that there's a degree of political will and foresight that's required, I think, to achieve a model like that. I think the idea that identity is tokenized is kind of essential from a privacy perspective and also from a security perspective, so that that mechanism is kind of privacy by design from day one. But it also, in my mind, it requires a level of maturity also in the ecosystem, either for you to be almost self-sovereign and understand the power of your own identity and understand how you should manage that and keep that secret, or you have a third-party ecosystem that helps manage that on behalf of users, which I think is perhaps more likely. But for me, it's the natural evolution of open banking to something that's a more generic open data initiative that allows not only this information to work within the construct of financial services, but more broadly across payments, which means a whole host of different institutions, because in effect, there are some very, very valuable data sets that exists away from banks. So, for example, payment of utility bills is very helpful in understanding that someone lives at a certain address and has been living at that address for some time. And so I think if you can create an initiative that is cross-industry, you end up with a far more powerful ecosystem. And I think this is where initiatives currently are heading with regards to digital identity. Because what you need is someone to orchestrate in the middle, potentially, because I'm not sure it necessarily works in a decentralized model, but perhaps I could be challenged and told it could work that way. But I do feel that some form of open consortium, which allows people to provide reference data, but also consume identity data, is what's needed to try and tackle some of these challenges. And I do see the beginnings of that in different parts of the world, but it still seems it's quite a long way off.
Yeah, exactly. I think, James, this is where we definitely need the next phase, because I was part of the team who started to pitch these kinds of initiatives to, and as I said, because I come in from an insurance perspective, at least to the largest insurance companies in India, and coincidentally, because the banks have the access and the distribution, the banks basically own most of the largest insurance companies in India, and they having access to that network and the data, it was a great use case, because there's a lot of there's data silos and stuff like that, unless you go to LexisNexis and data centralized shops where these people hold the data and they charge. So, for example, if banks are and I think everybody knows it. So, if these banks are joining,
Yeah, no, I follow that. Enoch, I'm sorry, Oh, sorry, I think I lost you there, Govind. I think the signal dropped out.
Oh, sorry.
Apologies.
Sorry. Basically, what I'm trying to say is that at the moment,
Hmm.
Oh no.
Don't know what. Don't know what happened there. I think Govin's connection dropped out. Enoch, I know you've been very patient. We'll come to you briefly, so I'm sorry that kind of jumped the queue a bit here, but I think it's because the train of thought was consistent. Govin, I see you back, but I think you've had a bit of reception issues. Dean and Sarah, I saw you unmuting. Did you have something to chime in on this issue?
Yeah, I wanted to build on what Govin had said. Where is the data that can allow for credit worthiness to be assessed outside of the data that lies into bank? If you're looking at what the large credit scoring companies, and here I'm thinking Experian, Equifax, and TransUnion. If you're looking at the partnership or the acquisition or the investments they've made over the past 5 years, which is an exercise I did a few weeks ago, they are clearly understanding that indeed, the credit scoring that they have been running for a long time based on the bank data is not sufficient, because it leaves out of the market the vast majority of the emerging market population. And so they are starting to work with companies that either are in the digital identity space or identity verification space and anti-fraud space, but also they're starting to partner with those who can create a credit score based on your mobile phone record. So whether it is through telco data, and here you have players, such as Lendo, Trusting Social, Signify. So all these guys are using the telco data in order to create a score. So that is entirely outside of the banking data and allows to assess the credit worthiness of the unbanked, or directly with players who are extracting a credit score based on the data on your phone. So not the telco, not the SMS and calls and call patterns that you are making, but more on the number of applications that are on your phone, when you use them, the number of contacts you have, how you store the contacts that do you fill in email. So based on all of these data, they create features and they can extract fairly relevant, even if it's an early stage industry, but fairly relevant credit scores, that allows to assess the credit worthiness of the unbanked. So again, this is an early stage, but I think the large credit bureaus have very well understood that and are now spending a lot of money into this space.
Thank you for that. Thanks, Sarah. Yeah, I agree. I think there's a lot still to be done here, and there is nothing more useful than past financial services information in terms of establishing credit history. But in the absence of that, then we have to look to other sources and what we can infer from other data habits and other information available. And I think there's a number of players operating in this space looking to solve for the zero file or thin file problem at a credit bureau. I do find that their efficacy is secondary compared to the primacy of financial services back history of credit information. But they do fill a gap, and they are better than nothing. I think that's certainly true. Dean, you wanted to chime in here?
Yeah, it's probably a whole topic in and of itself, but interestingly, from a local Australia perspective, when we launched our open banking sort of thing, it actually came about as a piece of legislation called the Consumer Data Right. So it's about a super high level, essentially putting the ownership of the data not in the institution collecting or holding it, but in the individual consumer's hands. And they're then mandated to provide certain APIs and access and deletion of that data if requested. So it's made a very interesting sort of, like you discussed, ecosystem that's starting up. So banking obviously was first cab off the rank for them. The energy sector's in consultation at the moment, and telco not far behind. So bringing some of those together, they've been very clear to step away from being a centralized regulatory body about it and doing much more industry participation and cross-industry participation. So there's been very careful not to mention digital identities directly, but it's interesting, a whole lot of that sort of aspect. So definitely worth looking into if that's an area you're interested in.
Cool, thank you for that. Yeah, very interesting indeed. And we had an attempt at that in the UK some time ago. I think it was around 2010, 2011. It was called My Data, MI Data. And again, it set down some standards to say I, as an individual, can go to various types of organizations, across different sectors and say, give me my data. And they had to basically provide that to you in a certain format. What we expected to happen was a whole ecosystem to be created of data custodians that effectively would go and gather that information for you, package it, and make it useful in some way. didn't really happen, and it was massively superseded by the open banking initiatives in the UK. But I do anticipate that it will become relevant again as more people engage in the kind of privacy debates and the influence that digital identity can have on our digital lives. So I do expect that will go through some form of renaissance in this decade, as more people recognise the value of actually solving for this in a sensible and holistic way. But thanks for the Australian example. It's very interesting to hear, and I know that there have been some digital identity pilots with Australian Post and people like that, because if we solve for digital identity broadly, it is a massive win for society as a whole, in my personal opinion. I know there are lots of people that fear the invasion of privacy or the potential for government to monitor their behavior by having a central identity. That's not how digital identity should work. Digital identity should not be a digital equivalent of our passport or driving license. It should be something far more sophisticated that allows for anonymity, but allows us to be controllers of our own data. And I think that if it's approached in that way, and it's not seen as a tool for mass surveillance, but instead seen as a way that individuals can take control back of their identity and their digital information away from large corporates, then I think it could prove enormously popular.
Absolutely agree, James. I think, like, for example, when we see the China example, it's not that they literally did the system that they did for the credit scoring, which is very similar to a passport or any publicly available document. Is because the Chinese culture is like that. It's very open, it's very transparent. That's the Confucian ideology of if you don't have something to hide, why your every secret should not be available to everybody. So that's pretty much the concept of the Chinese credit scoring system, and it fits a certain use case that they have around a certain kind of societal construct that they have. But you're right that basically there has to be that very clear control in the hands of the sovereign, of the data sovereign, which is ourselves, who should be able to control the access and pull back the data from places where we don't like it to be or want it to be. And this can be enabled by technologies like confidential computing, which I was reading up about recently. Confidential computing is going to bring in systems where there's specific hardware on the cloud where companies like, for example, a company X wants to check your credit worthiness. They can ask you to provide data. They will have their credit worthiness algorithm that will run and give them a credit score. So the confidential computing system will make sure that all your personal data that goes in with your consent goes into the algorithm, gets the score calculated, and then purges any data there and then without sending it to any other party, which means the requesting party only gets a credit score. So that's the kind of functionality and this is something that's already coming up. So I suggest people read up on confidential computing. I'm sure that this is going to be one of the most important foundational elements of the self-sovereign identity.
Very cool. Very cool. Yeah, I love that. Thank you for sharing. And I'd like to do some more rooms on identity and bureau and things like that, because they are recurring topics in these sessions, and I think need to be explored, and we need to get we need to get a range of voices in to argue those, because I think they can quickly become quite emotive debates about who we are and who gets to know what they want to know and why. And I think there is a level of understanding and sophistication in this space, which I feel I am miles away from getting a better understanding of how this is all going to play out. And I would love to be a participant in one of those conversations. But I'm going to change tacks if I can. I'll do a quick room reset. And Enoch, you have been extremely patient. I'm so sorry. You almost had a bit of a queue jump there, so apologies for that. We'll come to you immediately after the room reset. So welcome, everybody. Thanks ever so much for joining Fintech and Payments Club. This is Sunday Surgery with me, James in the Red, one of the founders of the club. And we run every Sunday an Ask Me Anything show. This is episode 15. We've been running it for 15 weeks in a row. If you are interested in the Fintech and Payments Club, you like this type of topic, please go ahead and give us a follow. If you hit the green house icon at the top of the page, you'll load up the FinTech and Payments page on Clubhouse. From there, you'll have the option of following the club, which means you'll receive notifications whenever one of my colleagues is opening a FinTech and Payments room on the platform. If you'd like to learn more about the club, you can read a bit of us about us in the About section on the page, but there's a lot more information available on our website, FintechAndPayments.Club. There you can learn more about the ethos of the club. If you'd like to register with us so we can understand a little bit more about you and what you'd like to listen to in the future, you'd be more than welcome to do so. And then we'll add you as an invite as a member of the club, which is open to all. Further, there's also our club calendar there. If you're finding that notifications through Clubhouse don't work for you, then I would really recommend that you subscribe to our calendar. You only have to do it once, and from evermore, any event that we schedule will just magically appear on your iPhone, in Google Calendar, or if you're old school like me, it even works on Outlook. And that way, that if there is an event up and coming that you'd really want to make sure you're available for, A, you'll get a reminder because it'll be in your calendar, but B, it's an opportunity for you to maybe restructure your day and make sure you're free for that event. In the week ahead, we have a series of weekly shows. On Mondays, we run Women in FinTech and Financial Services. There's a show run by Madison, one of my colleagues on the East Coast of the USA, who works in payments at Facebook. So that's 8 p.m. Eastern. On Tuesdays, we run a series called Yo Pros, Young Professionals, those breaking into the industry or carving a path now they've joined it. That's run by my teammates Olivia and co-founder Patrick. Patrick's based on the East Coast, Olivia here in London. And it's really a show that helps those that are getting started in the industry to establish themselves and network further. And that's typically at 8 p.m. UK time. So that's 3 p.m. Eastern, 12 noon Pacific. That's a very much a popcorn style show. You're more than welcome to join. On Wednesdays, we have Women in Payments Power Hour with Sam and Lara. Samantha has been on the Clubhouse for over a year. She's by far and away winning in the stakes of number of followers amongst the team. And this was the first named show by the New Yorker magazine when they wrote their notes from Silicon Valley all about Clubhouse. It's the Women in Payments Power Hour. It is, again, like Madison's show, it is it's open to women and allies. Anyone can join. And that's an hour starting 11 a.m. Pacific or 2 p.m. Eastern, 7 p.m. UK time on Wednesdays. And then there's a whole host of other shows in between. We do ad hoc shows. I think on Friday of next week, we'll be talking with Ashish Burla, who's the general manager of RippleNet, for example. So if you're familiar with Ripple or XRP, Ashish has been working that company for some time, seen it through various stages of evolution. So we're having a fireside chat with Ashish on Friday, the 21st of May. So do check out the calendar and diary for that. Later today, there will be a Asia Pacific version of what's happened in FinTech and Payments this week called The Wrap. And my fellow teammates, Monica, who leads Asia Pacific for us, as well as Anu and Jason, will be running that show. That's at 4:30 p.m. UK time or 9 p.m. India time later today. And then what else do we have coming up? Quick scan of the diary. Well, it tells me that we have on Monday, we have FinTech and Payments Club Israel edition. That's the third episode of our series. Hopefully our Israeli colleagues are keeping safe, because I know the hostilities have been only building over there. But that's at 6 p.m. UK on Monday, if you want to learn more about the Israeli fintech sector. It's a really vibrant sector. And on Thursday, we have a whole session on ESG. So why now, not later? That'll be at 2 p.m. on Thursday UK time. And Thursday, 7 p.m., we have the next in the series from Sophie talking beyond fintech, so how the world's biggest brands are embedding fintech within their customer journeys and processes to deliver a better customer experience. And Sophie's hosting Spiros Magaris, one of the top VCs in the fintech sector, and that's Thursday, 7 p.m. UK. If that was too much to take in, don't worry, the calendar's got you covered. Just go to FintechAndPayments.Club, click calendar. You can either see it as a grid or as a list. You'll see a weekly pane on the right-hand side as well. And that will give you all the information you need in terms of joining the rooms again in the future. So, Enoch, thank you so much for your patience. Really appreciate you hanging out with us this long. Please go ahead and unmute. Maybe give us a couple of sentences about yourself, where you're joining us from, and your question or perspective, please. The mic is yours. Thank you for your patience.
Yes, thank you. My name is Enoch Antwi. I'm the founder of Dinar. We're a fintech out in Ghana, focused on digital currency and QR code payments. We've been able to penetrate the Ghanaian market and had a real quick, rapid success, exceeded 40,000 users. And now, we're looking to venture out into other places of Africa. And so, I'm very, building the company and being in observance of the African fintech landscape when it comes to digital currency. I was one of the first. If you guys just check my Twitter, I have an article pinned. I was one of the first to realize the opportunity when it came to cryptocurrency in Africa. And so I've definitely been following the Fintech and Payments Club. Very, very advanced topics that really get to the crux of a lot of the issues that are that need to be resolved. And so, hats off to the whole entire Fintech and Payments Club and everybody on stage. It is it is an evolving landscape, and so I really wanted to uh, contribute some feedback and also ask some questions. First off, one of the biggest issues that one of the biggest things that we realized was, okay, we asked ourselves, how is it that Alipay was able to reach the point in which they got to in China? They're doing over $1 trillion worth of payments. Everybody has an Alipay, right? Um, one of the biggest things that we realized was that, okay, they've been able to get there because of they've been able to tie their application to identity. And so with that, it created this whole entire secondary, tertiary layer of solutions that they were able to provide based off the simple fact that they were able to leverage the power of a QR code to abstract consumer spending data and additional information on the consumer, uh, which was pretty interesting, right? Because, here we are, we're in Ghana, and our president, the Ghanaian market is trying to leverage, they're trying to push for Ghana to be the next, uh, the, they're trying to push for a wave of QR code adoption, which is very possible, right? But that's another discussion. So we realized that, and going back to the tokenized identity, I do believe that it's possible. It's probably going to have to be a fintech that does this or comes out with the solution, or something is going to have to be open in some form. However, in regards to credit in the emerging markets, there's going to have to be an identity solution that is not too cumbersome or too complex. That's the key thing. And then after that, the outside of one of the biggest determinants of credits is risk, right? And so, yes, there are, from cell phone contacts to mobile money, average wallet or balances to airtime, there's these different algorithms that, you can definitely abstract to evaluate the risk. But one of the biggest risks that I realize, which is part of the reason why we're not going into lending in developing markets at this stage. I mean, it's still too early for us anyway, but one of the biggest risk factors is income, right? You need to make sure that people are able to pay and will not default. And when you are in an economy where there's an informal sector, such as India or a lot of places in Africa with large populations, it becomes a bit of a risk, right? And so it's like that. The question now becomes, okay, if you're going to do lending, how do you evaluate your risk and decrease the risk? There is definitely an ideal solution for credit in a lot of these emerging markets, right? Um, but I don't think that Experian or TransUnion or Equifax will be able to come up with that solution. I mean, they could invest, they could probably offer insight, but the complexities around a lot of these informal markets, the telecommunications rules, the mobile money wallets, that are necessary to evaluate the risk and decrease the risk, and also communicate the information over in a very efficient manner. It's multi-layered, right? And so, that's one thing I
Yeah.
wanted to.
Okay. Cool. I mean, there's a few things there to pick apart, I guess. I think your first question, which given we got David on stage, I wonder if we should start with, which was, you know, David, you understand the Chinese market because you've lived there and you understand it probably better than anyone else on stage. What do you subscribe to? The success of Alipay. Why do you think that was so successful as a starter for 10? And I think maybe we'll come on to talk about the lending opportunities and how that can sit alongside payments and how that might emerge in a developing market.
Yeah. Yeah. So in China, Alipay and WeChat Pay is so these two are really very successful as we see today. But I think it's